How's it going, everybody? I really appreciate you guys again tuning in for this video. Don't want to take up too much of your time. If this is your first time watching, again, my name is Jameer Walton. I'm a licensed real estate agent in the state of Illinois. So if you know anybody looking to buy, sell, or even rent homes in the state of Illinois, I would love the opportunity to help them out. Or if you know any family members or friends that are not in Illinois, but they're still looking for help with buying or selling real estate, definitely feel free to reach out to me with my contact information below, and I can still help them out as well, as I have several different relationships with different agents across the country. So without further ado, I just wanted to talk about something real simple, straight to the point. I notice a lot of times when working with individuals, whether it's working on a pre-approval or whether it's working on just trying to get their credit built up so they can qualify for a pre-approval, or even if they're just trying to get their credit up so they can be able to qualify to even rent a home. A lot of people are not aware of exactly what makes up their credit score, and there's a lot of different credit myths out there. So I just want to take a few minutes of your time to just talk about that. Again, I am not a licensed credit specialist, so definitely make sure that you speak with a licensed credit specialist as well. But from the different credit specialists that I've heard from, and the credit specialist specifically that I work with, also along with my mortgage lender with Loan Depot, Corey Singleton, this is some of the basic general information, again, about credit that a lot of people are not aware of, or you might be aware of it, but you might have a family member or friend who's not aware of it. And again, you can share this video with them. So very first thing I just want to talk about on here is the very first thing that makes up your credit profile is your payment history. Your payment history is about 35% of what makes up your credit score. So I hope you can see that. Again, your payment history. So a lot of times I've run into individuals and I talk to people where they're kind of worried about being able to go through the process of getting a pre-approval for a home, or even just getting their credit ran so they can pass the background check and a credit check to be able to rent a home. A lot of times people think that, oh, because my score isn't the best, then that means that I'm not going to get qualified. Well, when it comes to buying a home, they're looking at your entire complete credit report card. So you might not have the exact score that you want, but your entire credit profile may still be very, very healthy. You may have a 620 credit score and you might not be too happy about it, but you got 10 to 15 years of on-time payment history, versus someone who has like a 700 credit score, but they only got 2 years of payment history. Your overall credit report card is going to look better to banks because of the fact that you have a complete and more longevity credit report than somebody who got a high score but they only really been building credit for 1 to 2 years. So again, your payment history is very important. So you want to make sure you don't miss any late payments. Even if you just got to pay the minimum and you don't like the idea of paying the minimum, make sure that you make those payments on time, because again, that on-time payment history creates a long payment history that can, again, even if you don't have a score that you're looking for, it will create a very great credit report card pretty much that the banks are going to look at. So the very next thing that affects your credit score the most is the 30% of it is the amount that's owed. So again, the amount that you have owed on your credit, whether it's your car loan, if you already have a home already, your mortgage, if you don't have a home, what if you got credit cards, if you got different installment loans, personal loans, anything that has that you're making on-time payments with, like a credit card or like a car loan, that's the total amount that's owed. So you really want to pay attention to exactly how much do I owe, because you might have a great credit report card on a great credit score, but some banks might be a little cautious about being able to approve you to buy a home, or your rate might be a little bit higher because you still owe a lot. Now again, it also depends on your income. So if you have about $80,000 to $100,000 in student loans, but you also have an income of $80,000 to $100,000, then it'll still be kind of fair for the banks. But if you got $80,000 to $100,000 in student loans, but you got $30,000 to $40,000 as your income, that's going to be a much bigger risk for the bank. Not saying that they want to approve you, but they're going to see you as a bigger risk because of your income compared to your debt. You don't have the quick amount of time to be able to pay that back. So again, you just want to make sure you're paying attention to that. So again, I don't want to take up too much of you guys' time. The very next thing on your credit report card is your length of your credit history. So again, this does tie into the first one with payment history, but the difference being is that with your payment history, it's looking at all of your history of having payments. With your length of credit, they're looking more how long are your lines of credit. So you might have one credit card that's for 2 years. You might have a car loan that's been a loan for about 4 years. They're looking at to see what's your longest amount of credit that you have, because that's what they're really looking for, to see the length exactly of that credit history that you have. So the very next thing I want to get to is new credit inquiries. Now, I really want to talk about this because and I'm pretty sure I probably spelled inquiries wrong. So if I did, don't make fun of me. I'm just doing this on the fly. But new credit inquiries. This is a real hot topic for me, because a lot of times, again, I run into people who, when they tell me what their credit score is and they tell me how long they've had payment history on their credit, I'm like, well, you might actually be qualified for a home like right now. You might not have the funds to close on a home right now, but you at least know right now your credit. You might actually be eligible to buy a home now. And a lot of times people think, well, if I run my credit for a pre-approval and I don't get approved, then that's going to ding my credit score. Please, please, please hear me when I say this. Yes. Is it going to put a negative impact on your credit score? Yes. But it's only going to ding your credit score by a couple points. And it only has an impact on your credit score by 10%. Now, I'm not saying just go out there and just start letting a whole bunch of people run your credit, because now, once you have so many inquiries within a short time span, then yes, that can drastically affect your credit score. But again, just getting your credit ran to check to see if you're approved or not, and the worst come to worst, if you don't get approved, your score is only going to go down a few points. But we sometimes think about, oh, well, it's going to hurt it, it's going to hurt it. But we also don't think in that same concept when it comes to whether it be that medical bill that we didn't pay that's now in collections. That hurts your score a lot more than a new credit inquiry. That Comcast cable bill, that AT&T phone bill that you didn't want to pay or you had a dispute with them about, now it's on collections. That hurts your score a whole lot more. A car repossession, even having a late payment, one late payment on your credit score can have a much bigger impact on your total credit than actually just getting one credit inquiry. So again, we got to stop thinking in terms of, oh, well, this is going to happen and this and I'm not going to be able to have a score that I need, and my score is going to be bad, and it's going to hurt my score every time I do it. No, new credit inquiries is only making up 10% of your total credit score profile. So again, you see payment history 35%, amounts owed 30%, length of credit history 15%, and new credit inquiries 20%. And the next thing on here as well, the final 10% is the types of credit. So again, types of credit meaning credit card, home loan a mortgage, car loan, a personal loan, a medical bill, installment loan, whatever the situation is, that's saying that 10% of your credit is based on the types of credit that you have. So you can be an individual that only have 1 or 2 credit cards and you've had it for a couple years and you got a great payment history, but somebody who also got 2 years with no credit cards and a great payment history with a car loan is going to have a much greater impact on their credit score, not because they're better than you at making on-time payments, but a car loan, making that on time every month, has a little bit more impact than actually just making just the credit card payments. Again, not saying don't make the credit card payments, because again, your payment history is 35% of your score. However, you just need to know that there are certain things on your credit that holds more weight than others. So maybe like a mortgage and a car loan going to hold a little more weight on your credit report than just your credit card payments. But again, let's say you have 15 different credit cards and you're making on-time payments on 15 of them every month. then that can still have just as amount of an impact on your score than than a car loan. So again, I don't want to take up too much of you guys' time, but again, I just want you to know exactly what makes up your credit score, because I see so many people, they're afraid of getting information and afraid of finding out if they qualify for something, whether it's a home, whether it's a car, whether it's you're trying to rent an apartment, not because you don't have the credit, but you're afraid that if I run my credit, it's going to drastically decrease my score. But in actuality, it's only hurting it by 10%. And again, the biggest factors that you see on here is payment history and your amounts owed. So again, I really hope this video was very, very helpful for you. And if you know any family member or friends that you think that they could really use this information, definitely feel free to send them the link to the video. If you got any other questions, feel free to reach out to me via my website below. If you've seen any other of my home buying process videos also, definitely make sure that you can also get that on the website below as well, where you can access all of those videos as well. So I really hope this is very, very informational for you. Again, if you're watching this for the first time, my name is Jameer Walton. I'm a licensed real estate agent in the state of Illinois, but I can help any family members or friends nationwide. So until next time, you guys have a safe and blessed day.